used for such economic stimulation policies. They can more specifically target those individuals or those companies to use the money to put in their productions, to put in their consumptions that can have a better effect of stimulating the economy. So these are the what I see as a major reason why DCEP is introduced. Of course, it drastically decreases the cost for issuing the paper money. The estimated amount of the reduction of the cost for issuing and circulating and managing the whole paper money is around like 30 billion euros every single year. So that money could be saved for something else. But I think the last reason is more of a minor reason compared with the other ones.
Thank you. Excellent. I just want to rewind a little bit because you said that the DCP has an aim to make the yuan more internationalized. I put a question about the DCP to Tim Draper last week, and he seems to be of the opinion that that the currency will be fairly closed to the world, and of course he likes the idea of a free market economy, and it's quite scathing where there are digital currencies that are restricted to old state lines. So I just wonder if how do you think the DCEP will help the yuan to become more internationalized? How will it compete maybe against the American dollar, which some people have been saying it might do, if it's still sort of fairly walled in? And that question is for anybody really, but yeah, maybe you would like to take it first because it's your area.
Absolutely. Thank you. Excellent question. My personal opinion, I think it will be a very difficult approach for the internationalization of the Chinese yen. I think the ideal is great. It's also a strategic move, but just tying this whole digital currency with absolute progression with internalization, I think that's a little bit of way to go. Yeah, because you will need a lot of international transactions and remittance in using the digital currency, but basically it's still promoting the Chinese yen as the major trade and remittance clearance currency. I think a more sustainable way would be continue to promote trade, so there's more consumption, purchasing power coming outside of the country to import more from the world. And then that could help with the internationalization. But just relying on DCEP to be the miracle worker for this to happen, I personally think that's not going to happen that way.
Thank you. Does anybody else have an opinion on this, or we can move on to the next question if not? Okay,
I would like to quickly jump in with my example of the petro, which had a very similar goal. It should also create something to compete against the US dollar and help Venezuela to circumvent sanctions and sanction control. And they created this digital currency. One can argue it was the first CBDC in record time, I think in 1 month, and they pegged it against reserves that later turned out not to be really existent or not, so nobody really knows. But the problem with the concept was that, I would like to quote a Washington Post economic reporter, Matt O'Brien, and he said, the petro is about creating something useless. That's why only foreigners can buy them, but only Venezuelans can spend them. And I think if you create a currency to compete against an international trade currency like the US dollar is, and the euro, let me say, still tries to become more and more, you have to watch out that you do not impose too many rules and regulations how foreigners can use your digital currency to consume your goods and to facilitate trade with your country.
I would also like to add one more point. For example, in Germany, you sometimes have the situation that you can pay with credit cards, EC cards, and all kinds of other possibilities. And very, very rarely right now, you see that German retailers are now connecting WeChat to serve Chinese tourists, right? And that's interesting because right now you have like WeChat for transporting the money, but in the future, this could be a Libra, this could be the DCEP Chinese currency. And therefore, I think that it can be quicker than we expect. It's regulatory, not easy, and also the transactions need to be scalable. I think there are tons of hurdles there, but the Chinese system at this point of time is one of the most active ones out there. Apparently, there are first workers in China who are getting their salary denoted in their digital version of the local Chinese currency. That's really massive, given that all other central banks in the world, except some smaller ones, are very much slower here and not so much progress. In my personal opinion is that next year we will see some kind of fight is the wrong word, but some kind of competition. You have the Chinese system live on the one hand side, and you have the Libra system live on the other hand side. And other major central banks, they are quite then some years ahead from starting their systems becoming live, right? That's my opinion, but would be interesting to see if somebody would reject this.
Yes, I definitely agree with both of you on this point. Definitely, I think from the point of view of ontology, which is a public protocol that provides the infrastructure for many of such innovations, we're not directly connected to the non-blockchain DCEP infrastructure, right? So I think for the rest of the world, it is a good thing that the Chinese government's being very progressive on this front. That sort of steers a very healthy competition. One of the major backgrounds for China to be so fast is also that the digital payment is penetrating very, very fast in China. So according to a central bank report in 2019, last year, basically more than 82% of the adults now in China use digital payments. So this is the infrastructure that is not yet seen in Europe and also the rest of the world, where credit cards and other payment systems are still very much dominant. So that is also the reason why this digital currency could be implemented faster. So we could hope that the European central banks and also different governments will be also faster. And I believe if we can really digitalize currencies, it's definitely going to unleash a lot of potential for fintech development around the world.
I would like to interject here. There's one thing I'm missing in this discussion right now. The donation of DCEP is right now, by economists, it's digital cash. It's not a central banking digital currency with, as the BIS defined, for example, with the retail and wholesale concept. Some say it's more or less just a digital cash version, like any other payment system. So I would love to hear what for example, an economist has to say about this statement right now.
I should take this question, right? So at this point of time, it's too early to really say what's going on here. You know, like the system is not much known about the system. There are some media reports about it. Some people are even doubting that it's an underlying DLT framework. So there's not too much knowledge. And I also know things which I read from the media, so I also might be wrong, of course. So I think it's too early to judge. But I agree, it's a digital version of physical cash. China seeks to remove physical cash out of their system. Of course, this also has transparency implications for sure. But you can probably easily expand such a system for industrial usages, interbank payments, machine-to-machine payments, and so on. Once you have this technology live, you know, this is in my mind a major block where others are struggling. They have done this first version where probably first transactions are really being done. That's the Chinese worker getting the money. And from this, you can probably easily expand to other domains where DLT-based payments can work, right? And then it gets really exciting, yeah. But we are just seeing the birth of CBDCs in real. But the implications are not known yet. That's why China is getting started slowly. You know, they are not rolling this out immediately to 1 billion people, but first doing like tests in first couple of cities, if I got the media reports right.
I just wonder if whether digital currencies, particularly digital cash, is pro-financial inclusion, or whether it's actually going to promote financial exclusion, because cash, of course, especially as you mentioned, Gloria, is a much more still in use in Europe. I think it's something like, was it 67% of all transactions are still in cash? And of course, the older generations are very slow to adopt new technology, if at all. You know, are we going to need a period of having two things running together? How long will it last for? Will it be like checks? Will they still be around in 100 years' time? Just, you know, who's going to have the facilities to sort of accept all these different forms of payment? Are we going to leave people behind? Is my main question. But Philip, perhaps you want to take that one first.
So right now you have multiple payment systems in place. You know, they are like integrated silos. You have the cell phone up here, the payment infrastructure, national, worldwide down here. And then you have like this network with tons of end devices. And these end devices are sitting, for example, with retailers when you purchase things. You know, this is how the system is currently running. And you have multiple such networks. I've been in Thailand last year, and then you see that at one retailer, you have like 8 devices of 8 payment networks, right? And in the future, I think this will dramatically change. You might have, for example, Facebook's Libra as a payment infrastructure on the lower half.
Sorry, Philip, I think we've lost you there. Yeah. You've frozen. I don't know if Lorenzo, do you want to step in?
Yeah, I will try to jump in quickly. I would like to bring in a very funny example where you see the central banking digital currencies a little bit stall in the deployment. If you look back a few years ago, when they legalized marijuana in the US on a local level, local state level, the producers had 2 problems. The first was security, and the second was payment systems for selling the marijuana, because from a federal level in the US, it was still prohibited. So the private security part was solved. It was easily solved. They found some private security companies jumping in for what the police would do, because the police would not secure these plants and they would not help these plant owners if there was a legal problem. And a lot of these marijuana owners, these producers, suddenly became crypto billionaires or millionaires and started to live a good life now as expats somewhere in Southeastern Asia or Southeastern America. Why did this happen? Because banks told them from federal standpoint and anti-money laundering laws and KYC, we're not allowed to take your money that you are making from marijuana. And I think that shows how Bitcoin, as a crypto-anarchistic currency, was able to help in this gray area, which was not completely illegal or legal. You could not really say that today. But a central banking digital currency with all the ideas of central banks, which are bringing back the central into the CBDC, they would have a hard time to allow to facilitate such trades. And I think this is fascinating if CBDCs can really settle such trades in the future and how they will be adapted, or that just a regulatory currency framework that only big companies and big organizations will use.
Yeah, thank you for that. We've got Philip back now. So sorry, Philip. I don't know quite how far we got into what you were saying, but if you'd like to give it another go. Oh, we've lost you again. Sorry, everybody.
Today, and therefore it's.
You're back.
Yeah, I'm on holiday today, actually. Therefore, I'm in a rural area where there is not much cell reception. That's quite tiring, I know.
So you were saying
I hope you can.
Yeah.
So I will resume with the question. So right now you have payment networks, and in the future, I could imagine that this could be based on Facebook's Libra, for example. And then it will get really exciting when you have multiple devices which are able to connect to one payment infrastructure, which could be Libra, but also another public or private chain.
Okay, but we already see that some retail outlets are not accepting cash already because there is the option for contactless payments with card. So I just wonder if we're sort of ushering a situation in where we will prohibit more people from taking part in the economy. But that was just my thoughts. So maybe we move on.
No, I think that's excellent thoughts. But I think you have two relevant conditions here which need to be in place. You have to have a universal payment network. This could be Libra. But you also have to get identity management right, such that people can onboard to the system. Yeah? So in case you are requiring passports and identity cards and so on, then the hurdle is so high that you cannot get financial inclusion. But in case you are having other approaches, biometric identities, then it gets exciting.
Okay. In terms of Libra, is it in? So I know you're very pro the technology, Philip, but is it in the public interest to team up with the private sector like that? And of course, Facebook is so powerful. Would there be risks involved in terms of the technology itself? Obviously, it's blockchain is still very new, and anyone who's been in the crypto space for 5 minutes knows that there's all sorts of new ways that people find to kind of hack the technology and insert bugs into it. I mean, what are the risks of using something like Libra or any platform for that matter? Should these things not be built in-house?
That's a very, very good question, but it's a difficult question because typically innovations are coming from the private sector. Typically innovations are not coming from the government or from the public sector. Therefore, at some point of time, you have to rely on private industries. Take cars, machines, industrial goods, and so on. The car is not the government is not innovating; it's the companies, and that needs to be here as well.
Actually, we just see the same with an American credit card company that just filed a patent for creating a digital fiat with a central entity computer where the central bank, the Fed, could plug in. And it was the same argument that the authors brought. It is that the innovation is coming from this American credit card company for drawing up a digital fiat currency system where the Fed could plug in.
And why Libra? Why not one of these other protocols? Philip, I know you've written a paper on the comparisons between Fabric and Corda and others. Why not one of these protocols? Why Libra?
Yeah, that's interesting because my personal opinion is with Libra, you already have like massive touch points towards end customers. In case Facebook is plugging in Libra in their apps, you have immediately dozens or hundreds millions of people who might use it. And this way you get these networks effects under control, where other blockchain projects have really big difficulties getting enough participants such that people like to use it and have fun to use it because there are other people in the that the only one which is able to invest. And Facebook can solve this by creating like massive adoption quite quickly. That's why I believe at this point of time, Libra will be a game changer. But one point here, I think Facebook made a very big mistake. They somehow associated Libra with Facebook, and therefore I also typically say it's Facebook's Libra. But that's pretty bad because that creates a bad reputation because of these privacy issues. I think afterwards it's always easier, I know. But it would have been better for Facebook to disassociate Libra in the beginning, because then the resistance by governments and central banks would have been much lower. I think there was a strategic mistake, which, but it's easy to criticize this afterwards, but just mentioning it.
Okay. Does anyone else have any thoughts on that topic?
Yeah, if I may add, I definitely very much agree with what Professor Sanders said about private sector innovation and also the strategic mistake Libra might have made. And I think also, I mentioned this point in some other conferences as well. I don't understand why Libra picked US and Europe regulation system, the regulatory system first, because Libra might be a very good alternative for many other financial infrastructures in many parts of the world, providing a much more efficient, cheaper, and also more inclusive financial services to many people, right? I just don't understand why they pick the most difficult markets to enter because of regulations. Maybe they should start with some other parts of the world.
True. Digital currency obviously has some great use cases where people are unbanked, and yeah, why pick countries where we do have great banking infrastructure, and maybe they mentioned Facebook tactically as a sort of marketing ploy. So lots of people on the Facebook platform, and maybe it's just us, people close to the cryptocurrency community that run scared from the concept of surveillance. There are a lot of people who obviously, are quite happy to give their details over.
Well,
go for it.
If I can jump in quickly here, actually Libra got an endorsement by the former Chinese central banking president. Apologies for might not say the name correctly, Li Hui. And he brought up a few very interesting points in a recent discussion about why he sees Libra as a front runner right now for the development of a CBDC. And maybe we will see some concepts of Libra merging into the DCEP.
Yeah, I don't know how that works because Facebook is not allowed in China. Creates a little bit of complexity, but yeah, I can see probably in a way of collaborating with this new challenger financial infrastructure provider, there could be some space for meaningful collaborations.
Can I add one more point concerning the private way of payments? What we should not underestimate here, if I have a credit card, or in Germany an EC card, or in case I use PayPal, it's always private organizations which are maintaining the system such that payment is being done. It's not the government, it's not the ECB. The European Central Bank is operating in the background, but if I, as a retail person, spending money somewhere, it's always private organizations. So it can be a bank, but it could also be Libra's consortium. So therefore, from my perspective, I don't feel that it's an issue that private organizations are running payment infrastructure. It's not changing anyway, like in the last decades, where also private companies are running payment infrastructure for retail people.
And I agree. I'm playing devil's advocate a bit. So some of the most trusted technology has got to be the stuff that's been in open source for some time and has had every dev under the sun look over it, and that's probably better than building something second rate in house. And not to mention that blockchain developers are really hard to get hold of. So we've not got very long left. So I'm going to throw the questions out to the audience. And there's one here that I wanted to ask anyway. So is it valid to talk about a threat to the current banking system, or is CBDC to be seen as a natural transformation process going on? And my take on that is, are we going to make banks irrelevant if currencies are coming straight from central banks? Philip?
I can try. I would argue that it's a natural transformation. I think everything is getting digital, everything is getting dematerialized, information has gotten dematerialized. Imagine like 30 years ago, we had letters and stamps and postal offices for moving information and paper around. Now we send WhatsApps and emails, right? So information transmission has become entirely digital. Money is still physical, or the entire area of notaries, like real estate stuff and so on. Value is written on paper, stamped and signed with a real pencil, for example. That's how value transfer is being done currently. And this is, of course, all moving digital now. So in my mind, it's a natural digital transformation. We have moving information that's, like the letter. 30 years ago, we have moved all information online, and now we are moving value online. And therefore, it's the natural next step. But of course, governments and regulatory bodies need to be concerned and need to basically also provide rules, because otherwise privacy cannot be kept. Transparency should be there in some reasons, but in general, I, being in Germany, would like to keep part of the intransparency which is provided by physical cash. That's for privacy reasons. So therefore, we need to maintain these values, but it's a logical next step that all value transfers, including also real estate and stocks and security tokens, everything is moving digital, and DLT is the infrastructure for this.
If I may chime in, I also see it complementary, and a lot of banks would love to do more with cryptocurrencies, enter more the market with cryptocurrencies. In Austria, one of the biggest banks is now exploring bringing out their own cryptocurrency. I know it's a big hurdle for banks to use cryptocurrencies in regards of know your customer and anti-money laundering, where also technologies are coming up more and more to support these companies, to support these banks, with solutions to track where the payments are coming from and who is behind the payment. And the identity is also the problem with the cryptocurrencies right now. I also agree, and I think this is the strongest point of a central banking digital currency, that it should be government-backed. The framework or the methodology at least should be government-backed, and it is up for the private companies, the banks, to facilitate the settlement of it and to protect it also, because we know that the private industry is doing a lot to protect infrastructure. And in some cases, when we look at government websites, they sometimes do a better job than some government websites.
I think I just have one more point to add. I can see how there could be a political struggle in terms of power between the commercial banks and the central banks in terms of who holds the cards for the future. But I agree with all the panelists that this is an inevitable trend in history. So the smart way would be for the commercial banks to also jump on the card and look for more opportunities rather than to just try to block in the risks of the present, but more focusing on building the future.
Yeah, and I feel already as if the banks are receding somewhat, the retail banks are receding somewhat into the background, because we have many incumbents now coming in to the digital payment space, app-based payment services. The younger generation is really embracing those, and I wonder if they are already, they're just bolting things onto existing infrastructure, and they should be building, their own challenges from the ground up to stay relevant. We have another question. We've touched a little bit on this, but how do CBDCs benefit ordinary people? And they're specifically asking about the government surveillance aspect. So if we are looking at introducing a digital currency that is a digital cash, cash obviously is fairly anonymous. So can we expect, should we expect a digital currency that emulates cash to maintain that feature? Obviously in China, I don't think that it is, but in as far as a digital euro goes, if it's designed to be cash, should we expect it to have track and trace built into the design? Does GDPR protect us against that? I understand in the US it's unconstitutional, but perhaps there are some thoughts from the panel on that.
I can give a try. So I think this is all right. It needs to be balanced, transparency and privacy, but also we should be very honest here. Our payments today are not private in any way. So for example, I would say with my monthly budget, 80% are going via a bank account. And in the records, somebody could look into, be it the state or be it the bank, being some kind of algorithm. 80% of my money transfer is basically being digital and can be monitored with credit cards and so on. How much money am I physically spending with physical cash? So what is the share of really being private money? per month, maybe if at all 20%, probably even less, maybe just 5%. So privacy is already gone. Therefore, to some degree, this discussion is basically, it's important, definitely, and we need to ensure privacy in the future, but it's just relevant for 5% of the money transactions, I would guess so.
Okay. And a final question.
Sorry.
Oh, go for it.
I can also speak to that point a little bit. Definitely agree with what Professor Simon said. I think the bigger challenge here is the digitalization of all our data and online, offline presence, right? So that's a bigger question that is very pressing. The solution from the industry's point of view is definitely decentralized identity, self-sovereignty over your data, and access to your information. So that should be solved by the DLT technology, and the awareness from people is important. But it doesn't really go beyond as a separate question in terms of privacy protection. So that should happen already to protect your online browsing history, to protect your other type of information from being seen and analyzed and utilized for other purposes, commercial purposes, or very risky frauds or controlling from other third parties. Could be government, could be also commercial organizations.
Okay. How close are we to issuing the digital euro? Can we put a timeline on it? Too soon, and maybe we haven't looked at all the risks, but leave it too long, and we'll be late adopters, I feel. Lorenz, do you want to take a first take on this one?
Well, looking at the European scene of software development and high technology, we have our strengths, but it's definitely not developing a digital banking currency, I think. I hope sooner or later there will be a framework that is adopted by all members of the ECB, and that will lead to a system, because otherwise I fear we will adopt something else, and it might be Libra, it might be another stable coin. There are some other interesting stable coins out there. It's not only Libra as we talk today. Or we really risk losing the train here. So this is my thought about it.
I would argue that it really depends on the platform. A blockchain in my mind is some kind of transport platform on which the euro is running. So therefore, in case we would rely on a system created by the European Central Bank, I think we would have to wait for 6 years or maybe 7 years, maybe just 5 years. But in case we are Libra, then next year. But already right now there are a couple of companies who are working on this. That, for example, Landesbank Baden-Württemberg and some other startups which are already experimenting with the real euro on the blockchain.
Okay. Is it ever going to be a possibility that we will have a country putting its currency out globally? So it's just a harebrained idea, but say we were to put the euro out and anybody could adopt it. I mean, there's a couple of countries that have already adopted the euro, and it's not legal tender. I think it's Kosovo and Montenegro. But I mean, they're frowned on, obviously. But at the same time, is it not the greatest opportunity to have multiple countries take up your digital currency? Would that not just be the best thing for a country? This is just one of my personal questions I wanted to put out to you. Is it ever likely to happen? What do you think? And it's for anybody who has a...
Okay. I think you're right. It's a huge chance out there to be able to move value around within a couple of seconds through the entire world. That's massive. And we didn't talk about how to allow financial inclusion in developing countries and emerging countries. In the future, you just need to have a smartphone, internet and electricity, and then you can store money and move money around. That's really massive. You get to have identity management under control. That's fine, but it's a huge chance for financial inclusion. And we also didn't really touch the machine economy yet. That's probably something for another panel. In the future, there will be millions or 100 millions of devices being connected to the internet, like machines, I don't know, cameras, cars, trucks. They will all start autonomously engage in payment transfer. And of course, this will be DLT based. I have no doubt here. So therefore, I absolutely agree. It's a huge chance. And there should be much more energy flowing into these areas, not by us here in the call. You know, we are doing, I think, as much as we can, but also by more senior decision makers who have a potential budget, which needs to be rooted in this fascinating, innovative area. I'm very pro here, as you see. I have to be pro because so many people are con, so I'm even more pro.
And I would like to bring up the big risk here. I think putting the whole currency of a country into the blockchain is also a huge risk. I would like to say the history of Ethereum and the attacks on the blockchain on the Ethereum Association with a smart contract showed that if you do not really 100% close all the loopholes, somebody could find a way to quickly move away all your assets. And if it's digital, it's very fast, as we just said. So I think we need a lot of risk assessment and conceptual work before we would allow that. And even the adoption, more people, more interest, more criminals, of course. That's also my thinking here on the widespread adoption.
I agree. It's definitely a space that's been, hacked and come back from that multiple times. So one can only imagine that people will need to stay vigilant and keep working on shoring up the currencies as they're released and in circulation. We have come to the end of our time. So I would like to, I guess what's left is to just thank you for joining and for your insights. And I feel wiser, so I hope our audience do. And I hope that everybody watching enjoys the rest of the conference. So thank you, Philip. Thank you, Lorenz. Thank you, Gloria.
Thank you very much.
Thank you, Freya, and thank you, other panelists, and thank you, the birds in the background. Our next speaker comes from Raiffeisen Bank International, which has been a partner of ANON and Block Expo from the very beginning. Stefan Andjelic is the blockchain lead at RBI, and he will talk about RBI coin and how to bring asset tokenization to Central Eastern Europe. Stefan, welcome, and the stage is yours.
Hello everyone. First of all, thank you for being here with us today in the virtual setup. As a brief introduction, my name is Stefan Andjelic and I'm responsible for leading the blockchain hub at Raiffeisen Bank International. So as we have people from all over the world here today attending the event, let me just say a few words about Raiffeisen Bank International. So Raiffeisen is the largest Austrian as well as Central and Eastern European bank with network banks in 14 different markets. And the bank has approximately 47,000 employees, over 2,000 business outlets, and is serving 16.5 million customers. And this geographic footprint that Raiffeisen has is something also to bear in mind as it is relevant for the use case that I will be discussing about today. We also go by the abbreviation RBI, which may be easily confused with the Reserve Bank of India. But if you Google RBI and see it being mentioned in the connotation of cool blockchain projects, you can be very certain that it's us. All right, so now let's take a look at the RBI Blockchain Hub in particular and see what is our role within the organization. And there is usually a short story that I'd like to tell. So as the world was buzzing around cryptocurrencies during their boom in 2017, the banking and financial services sector started looking more deeply into practical applications of blockchain technology and what it means to their business, either as a tool to improve currently existing business processes or to introduce new business models. And just like in any other financial institutions, many blockchain enthusiasts within RBI were talking about the technology and its applicability to our business, but the issue was that at the end of the day, the topic was on no one's agenda. And this is why the Strategic Partnerships and Ecosystems Department decided to approach the RBI Board of Management and propose the creation of RBI Blockchain Hub, an internal competence center responsible for the blockchain topic in general. And this, of course, also includes driving, monitoring, and steering of blockchain-based initiatives. And as outlined in this slide, RBI Blockchain Hub is one of 3 mutually interlinked pillars of strategic partnerships and ecosystems at RBI. Another pillar is the Open APIs team, an internal competence center responsible for development of APIs, which are in blockchain sense utilized anytime we want to connect our blockchain application to our internal banking system. And last but not least, there is also the Elevator Lab, which is a team responsible for partnerships with fintechs. And if you look at it objectively, blockchain technology as such is not a core competence of banks yet. So for many initiatives that we are working on, we team up with fintechs specializing in this field. And among such initiatives where we team up with fintechs is also the asset tokenization platform that I will talk about today, which we developed jointly with the Polish fintech called Bilon. And the reason why we decided to team up with Bilon for this project is the fact that they have already been a well-established player in the blockchain field with a proven track record. And having said that, Bilon created its own proprietary blockchain solution with commercially working products. One of these products is the digitization of national currencies, including the e-money flow, under the e-money license in both Poland and the UK. Then identity and data sharing is the second product based on the Bilon blockchain protocol, and exchange of sharing of documents that fulfill quite strict EU regulatory requirements complements the solution set being developed by Bilon today. And the core of the solution is a distributed ledger developed by Bilon, where tokens, documents, or identity are stored locally at users or corporate devices. And just as the slide suggests, we believe the era of asset tokenization has already started. So there are both incumbent players and fintechs offering new, innovative solutions in fields of asset tokenization and stable coins. And adoption by market incumbents, together with increased regulatory clarity and general awareness, has driven the maturity in the field of tokenized assets. And for RBI specifically, the big inspiration for our project has been JPM Coin, a stablecoin initiative developed by JP Morgan Bank, targeting the facilitation of payments between institutional clients and JP Morgan. Another fact that illustrates the potential for the business opportunity with concept of tokenization is the research published by World Economic Forum, stating that by 2027, 10% of global GDP is expected to be digitized through tokenization. Okay, so without any further ado, we would like to show you a teaser video prepared exclusively for the ANON conference. Please take a look.
The race to build fully digital money has begun. Other companies, together with private and central banks, are taking part. We are Bilon, and we know how to lead this race. Introducing RBI Coin, the next generation digital cash solution. A tokenized euro for instant payments available 24/7. RBI Coin enables immediate money exchange between RBI banks and their customers with real-time settlement. A transaction network for national currencies on blockchain will allow RBI Group to become the most innovative bank in Central and Eastern Europe. Welcome to the world where money is truly digital. Welcome to RBI Coin. Welcome to Bilon.
Okay, so I hope you enjoyed that video. When we at RBI decided to get some practical hands-on experience with the concept of tokenization, we decided to start our journey with the asset class that we as a bank feel the most comfortable with. And as you can imagine, that asset class is money. So together with Bilon, we created RBI Coin, which is simply a digital representation of euro currency in the form of these coins. So more precisely, RBI Coin is a stable coin with its value directly linked and backed by euro currency, where one RBI coin is equal to 1 euro at any point of time. And considering the fact that the concept of tokenization was totally new for us, we wanted to start with testing it in the safe environment, so the intended and envisioned scope of RBI Coin is to be used for payments between Raiffeisen banks across Austria and Central Eastern Europe, or what we also refer to as Raiffeisen family. And the infographic on the screen illustrates on how RBI Coin works. There are basically three key components of the solution, and these are issuance, transfer, and redemption of RBI coins. So let's now go in more detail for each of these components. In the first step, a client who would like to use RBI coins would send euro deposit to a client reserve account which is held with RBI. And this reserve account is connected to a minting node of the Bilon protocol, which identifies incoming transactions in euros and mints, meaning creates, an equivalent in RBI coins on top of Bilon protocol, which are then sent to this specific client. So as a practical example, let's imagine the client would like to obtain 100,000 RBI coins. So in the first step, the client would send a deposit of 100,000 euros to a client reserve account at RBI. The minting node would then identify the incoming transaction in the amount of 100,000 euros and would create 100,000 RBI coins, which would be transferred then to this client. It's also important to mention that money in the reserve account is being kept with RBI and is not used for other activities by the bank, implying that basically the amount of money held at this account always equals to the amount of RBI coins in the circulation. And once institutional clients have obtained the RBI coins, they're able to conduct payments using RBI coins with all other institutional clients that are part of this ecosystem. And last but not least, the clients are also able to redeem euros for RBI coins at any point of time. So if a client would want to redeem euros, he would simply send RBI coins to an account where these tokens will be burned, meaning removed from the circulation, and euros would then be automatically transferred to the bank account of this client. Another important aspect to emphasize here is that the underlying Bilon protocol enables not only for payments, but it also allows for the possibility to attach documents to transactions and send them along with the payment. So for instance, if a client would want to send invoice along with the payment, he would be able to do so using Bilon protocol rather than using email for sending an invoice separately. And naturally, this would allow for reduction in manual work arising from reconciliation of payments and invoices. The first very apparent benefit of such stablecoin solution is that it allows for very fast peer-to-peer money transfers and near real-time settlement between entities transacting without any central intermediaries, leading to efficiency gains basically driven by both automation and disintermediation in this process. So during the first phase of our project, the payment transfer and settlement was taking 6 seconds on average, and theoretically the platform is available 24/7. And by design, a blockchain technology serves as a distributed ledger that records transactions in a verifiable and permanent way, and is also fundamentally resistant to any modification of stored data. And therefore, the nature of blockchain allows it to be used as a source of verification for reported transactions and as a single source of truth. And as a result, the automation of this verification process allows for cost efficiencies in the audit environment. And lastly, this solution is disruptive in a way that it allows for many new and innovative business models and use cases to be built on top of that. And I will talk about it in a bit. So one of key features of blockchain and DLT solutions are easily geographically scalable due to their decentralized nature. And considering RBI's geographic footprint in the Central and Eastern Europe, it will be fairly easy to expand the solution across our markets in that region. And why is this important? So it's important due to the fact that the value of blockchain solution multiplies with more players participating in it. And blockchain requires the creation of new industry ecosystems, so to say, in which participants must work together on a different solution. So in our particular use case, creating a Raiffeisen ecosystem is the way to go, as all banks within the ecosystem would be working towards a common goal, and that goal is making payments faster and more efficient, as well as introducing new business models. And that also brings me to a very important point. So this infographic represents a state towards which RBI group is moving. So basically having a unified RBI tokenization platform. And the very core concept is based around the tokenization of securities and currencies, commonly referred to as a foundational layer. And this is where RBI coin also lays. So we can look at it this way. RBI coin itself is not a killer application, but rather a building block for a variety of different use cases that can be developed on top of it. That's where tokenization-based platform solutions fit well. So since RBI is headquartered in Austria, we started with the euro-backed stablecoin, but ultimately our vision would be to have coins backed by other currencies as well in scope of a multi-currency stablecoins platform for payment facilitation. So for instance, for euro payments, you would use euro-backed RBI coin. For payments in USD, you would use USD-backed RBI coin, and so on. Another use case that one could imagine on top of the foundational layer is the facilitation of open account trade transactions. So even today it is possible to transact in some assets immediately, but if you want to trade these assets for money, you lose the benefits of this fast settlement since the money flows are generally slower. And if the money could be also exchanged immediately, and with RBI coin it could be achieved, you could trade more efficiently and instantaneously against those other assets. And last but not least, one could also imagine building a platform where companies can issue marketable securities, meaning both equities and debt instruments, and complete both legs of transaction on blockchain. So once you tokenize equity on asset tokenization platform, you should also be able to tokenize currencies and make payments instantaneously. And in combination with the business logic incorporated in protocols such as the one of Bilon, one can actually remove the settlement risk because the smart contract basically checks for two things. So first one is whether the assets are available and are tokenized. And the second one is it checks whether the funds are available and are tokenized as well. And then, as a result, the instantaneous exchange, so-called atomic swap, between buyer and seller would take place and remove the settlement risk associated with it. And that's one of the big powers of blockchain. And then what also comes on top and completes the picture are all the topics surrounding public policy oversight and regulation. And when we are talking about legal certainty of such solutions, a well-founded, clear, and transparent legal basis in all relevant jurisdictions is a prerequisite for any asset tokenization arrangement. So with that, I will close today's presentation, and for any questions related to what's been presented today, I would be very happy to talk to you in our virtual booth area. So thank you all very much and enjoy the rest of ANON's program today and tomorrow.
Well, thank you, Stefan, for your insight into RBI coin. We have Daniel here with us again. Daniel, what's your opinion on central bank digital currency?
Hey, Shiva. That's a good question. So I've been heavily involved in the discussion in the chat, and having an opinion on central bank digital currency is not so easy for me to answer right now, but I would like to go a little bit more into the detail in what we've been discussing in the chat lately. It was very much focused on privacy and why why we even need central bank digital currencies and why it should even be based on blockchain. Because the overall opinion that I've been, a little bit observing was that we have a digital currency already because most of payments is done digital anyways. Now we see that governments are trying to bring people more and more to not use cash anymore because cash is basically the only currency that gives you real privacy. So the thing is that the community doesn't really understand this. Why do we need blockchain here? And considering CBDC or Libra as crypto is a little bit, not the right term, I would say. So I think it all comes in the end to usability because most of the people don't care about privacy. That's why everybody uses Facebook. Nobody is reading any privacy terms or anything at all. You always click on accept right away. Maybe 1 out of 1 million is reading that and he's a lawyer or a privacy freak. So I think what really matters is either CBDC helps in terms of usability, or it really helps banks to reduce costs and it helps maybe to make cross-border payments easier. But I'm really waiting still for a good explanation or for a really good explanation why we need blockchain in the first place for it. And I think also, as I said, most of the people in the community have a similar opinion because what really matters to most is privacy and transparency. This is why crypto prevailed in the first place. So yeah, I share the opinion with most of the guys from the community.
Right, thank you for that. And so far we've had a panel discussion, we've had some fireside chat and some speakers. How do you find the event so far?
I mean, I'm really satisfied until now. Of course, we have some minor problems now and then with connection issues, but I think that's what you're expecting from an online event. I mean, in worst case, I can always join you here and we have a little chitty chat about the agenda or whatever. So I'm happy to join here once or twice in the next hours as well. But I'm very satisfied, and I think the very cool part of the conference will start right now, after the speech from Markus, because then the networking and the really interactive part of the event is starting.
Okay, well, thank you very much for this. Our next speaker is the head of enterprise marketing at Austria's largest telecommunication company, A1. Let me give a very warm welcome to Markus Schreiber, who will talk about the blockchain as an innovation driver for the telco industry. Markus, welcome. The stage is yours.
Hello, everybody. I hope that you can see the presentation or at least see or hear me. If I could just have a short signal that everything's fine.
Thank you.
Okay, that's good. So, ladies and gentlemen, the blockchain as innovation driver for the telco industry. What does this exactly mean? What did I bring along this noon? We did investigate on the blockchain topic, I think at least 3 years now. But it was always the big question, how to get added value out of it, or maybe someday earn money with it. So we did, of course, like anyone else, see 2 major fields to innovate. And first category is the part of negotiation. And the second topic would or should be payment. At that time, we started a couple of projects, and I just brought along 3 use cases for today, 3 best practices that we do have in place for now. The first thing is a wholesale solution that our wholesale department needs in the interaction with other partners. The second one, and this is a very tiny little one, is the packet station, let's say a locker station powered by A1. And the third one is our, let's say, adapted A1 payment solution. So let's start in use case number 1, A1 wholesales. We do have a lot of partners when it comes to give you just a brief example, to interconnection. If you as a SIM card user, you as a mobile phone user go abroad in any country, you are usually that lucky to be able to phone or to use data abroad. This is handled by different wholesale departments throughout a lot of telco companies worldwide. So the topic is that if you are sitting in Saudi Arabia and you're using 1 gigabyte, then you will have, let's say, a certain amount of money to pay. And this is why Saudi Arabia and Austria, or Austria and Germany, and all countries all over the world need to interconnect or interchange the used minutes, the used roaming minutes, the used data. So this month by month is a lot of money going from the left to the right and from the right going to the left. And this is why our department in wholesale said, okay, there needs to be some kind of solution that is going, let's say, in a digital way. And maybe to cut the corner at this point, the idea was to just interchange the number of minutes, the number of gigabytes from partner A to partner B, to reduce, let's say, a lot of work and to just digitalize it, but to do it in a very secure way. So the idea, to very briefly reduce it, was to just say, we do not pay whatever, €1 million to the provider in Saudi Arabia, and the Saudi Arabian tourists coming to Austria mean that they do roam in our country, meaning that maybe Saudi Arabia sends us 800,000 euros per month. So there was the idea to just say, okay, how many minutes do we have left? How many minutes do we have on the right side? And what is, let's say, the difference? And how could we quickly move these minutes, these interconnections, these fees, let's say, from left to the right? So this service is online, I think, in the meantime, 2 years, 1.5 years, with more than 40 partners, where we, based on blockchain, interchange or exchange the most important and critical workflow items that we do have in this business. So we say this is just the beginning. On these skills, on this use case, there is a lot of things that can be done basing on that technology that is, let's say, at least seen on the horizon. The second use case is a very, very tiny project where we just decided to go in own locker stations. The main idea, I think 1.5 years ago, was to put locker stations throughout Austria. Started in Vienna and then, let's say, the bigger surrounding area, to just not only give the possibility to pick up parcels that you get by post DHL, GLS, and DPD, and all the others, but to also give people the chance to maybe exchange a key, maybe exchange some other goods privately, one by one. So what we did was we started an entrepreneurship 1.5 years ago, meaning 4 persons in a very small group said, okay, we do have a good idea. We would like to invest in a locker station. Why it is a tiny product for us today is the reason that we just said we just used blockchain to secure the transactions. So not the packet or locker stations itself are, let's say, the key blockchain topic. It's the app and it's the transaction that we just wanted to have 100% secure. The third use case that we have or working on is, let's say, the most exciting one for me personally. It's about the topic payment services, where we just said, okay, a telco entering the crypto market, how should this look like? Should A1 be the first to use an own coin, an own token? Should there be an, let's say, Austrian coin or token powered by a telco? What was the idea behind? We just said there needs to be added value for the society, for the economy. So at the end of the day, we just said we do not want to have a coin. And let me just compare it maybe with iTunes and apps. There was a lot of app developers, and many startups are focusing on the app. Let's have the new big app, the new big thing. what we wanted to try is to be kind of an iTunes, just to provide the platform. We don't care about the coin. We don't care about the token. We just wanted to say what is necessary for a society like we have in Austria, for an economy that we have in Austria, to just allow digital currencies. So this was the idea. We said, oh, this is our mission on that project. We just said, we set up and establish the acceptance of digital currencies, of course, meaning cryptocurrencies, but all the other kinds of currencies. So how does this look like? We just said, okay, alone, we are not the pros on any kind of technology. So we said, okay, there needs to be kind of a partnership, Salamantics providing us, let's say, the blockchain or crypto intelligence, Ingenico as a data cash terminal provider, and Concardis bank that was willing to walk this path with us. So what is behind that? Today, you have maybe a small store with a small shop selling lawnmowers. Lawnmowers is a good example. So maybe you are that lucky to be interested in crypto, and you know, okay, I know about Dash, there is Ethereum, there's Bitcoin. So if I sell my lawnmower at 10 o'clock in the morning and someone wants to pay with Dash, then I am very happy because I know how to handle it. But if there is no time to interchange the money during the day or during the week, I could win or I could lose. So we see the risk there. What we said is Austria will not be supported by having an A1 coin, but what we said is we want to go into this middle here to say, if the data cash terminal that is shown at the butcher, at the lawnmower seller, at the TV seller, at a big retail group, if this data cash terminal is enabled to accept digital currencies, then we can, let's say, push the acceptance. The second thing was it is very difficult to go into a retail supermarket in Austria. It's Spar, Rewe, Billa, Hofer, Merkur. And you just buy 2 bananas and wait at the cashier for maybe 2 minutes to pay the bananas, or 3 minutes or 20 minutes if there is a high volume on the market. We know that there is an acceptance of the customers to wait for, I don't know, 10 seconds, 15 seconds until the payment is done. So, and the third pillar at that point was to just say, how can we protect society, the people, the customers, but also the, let's say, the shop owners that are sitting on maybe an exchange risk. So we just said, okay, let's put all our efforts into that data cash terminal and let's construct and let's build up the software, the payment terminals that are able to understand your credit card, your NFC chip, your wearables, but also the Bitcoin or any kind of digital currencies such as Alipay or WeChat or anything else. So we worked, I think it was more than a year on this solution. And we started a trial last year in summer, putting these terminals in our own shops, in our A1 flagship stores, where we just see, okay, is there an acceptance? Do people come to buy with Bitcoin or cryptocurrencies? And yes, they do. Austria is a country where we year by year do have a lot of tourists, and so there is tourists from Asian Pacific room, from Arabic room, from Africa, from North America, etc. So we see that there is, let's say, more common use, of course, in Asia. So if you go to the Vienna Belvedere, or you go to the Sacher Hotel to have some cake, some Sacher cake, and it's maybe an Asian tourist to say, or to decide, okay, guys, could I pay with Alipay? Could I pay with Ethereum or something? Then the waiter needs to see, yes, we can. Yes, it's possible. Yes, we accept it. Today, or let's say the last years, it typically was the answer to say, okay, what is Alipay? What is Ethereum? What is... So as Corona was not in our, let's say, business case this year, we did not finally officially launch this service loud. We did have a silent launch a couple of weeks ago. And this summer or this autumn, there will be, let's say, a louder promotion after, let's say, 1 year of testing and finalizing the product. We are offering a complete A1 payment service that allows you as a customer to get a data cash terminal, to have a 24/7 service on it. But, and this is the point, you as a lawnmower seller, you just say, okay, guys, 500 euros, this is the price of the lawnmower. And your customer says, okay, do you accept Dash, for instance, or Bitcoin? And the lawnmower seller just says, yeah, okay, fine. You enter the 500 euros into that data cash terminal, and for 60 seconds, there will be, let's say, the exchange rate kind of fixed. And if Dash Bitcoin enters the terminal, the lawnmower seller can decide whether he or she takes the 500 euros or the coins as they are. So this, and this is my personal strong belief, is the future. This allows our customers to step by step into digital currencies, no matter which coin is on a, let's say, a higher rate, lower rate, so that it is getting normal. I think 5, 6, 7 years ago, NFC was quite not normal. Thinking of my grandmother, she was, I think, one of the first to have this, let's say, ATM cards. And she said, okay, I will be robbed day by day. I will be robbed because anyone who is passing me, not touching me, is able to rob my money. So I think 3, 4, 5 years later, everybody is used to NFC. So my big hope is that in 5 years from now, everybody is able to pay with everything, whether it's coins physically or it's digital coins or any other currency. So I think we are first mover on this, as we are having this product for, let's say, friendly customers for a couple of months. And we did our first trials last summer. And to be honest, it was quite a bloody journey. And this is always important to tell anyone who jumps into these projects. You have a lot of people, with, let's say, the information status that you get out of the newspaper. So I think at least for 12 months internally, repeatedly heard that we do not want to be involved in drug business, in any kind of weapon selling, reselling, in any kind of illegal business. It took quite a long journey to convince the people to give the understanding that this is just a new way of technology and not something that is close to forbidden things. So I do have 3-4 minutes left. The very important thing for me is that we try things out, and we as a telco are not typically the first to jump into blockchain. You've seen that a wholesale solution like changing roaming minutes, you've seen that packet station, locker station, just to secure the transactions, or a bigger thing like payment services are able to be done by a telco. There is 2-3 more topics in our pipeline that are not, this is not launched yet. We're just thinking about business wallets. We are thinking about other kind of contracts that we could put on a blockchain platform. So that's it from my side. If there is any questions I could answer within the next 4 to 5 minutes, then please feel free.
Well, thank you, Markus, for that. This was a great start to ANON Summit 2020. We are about to go on a break, but before, I would like to point out that although there might be no live program happening on the main stage, you still have the opportunity to go through our expo area, where you will get more insight into some of the things that you've already heard this morning. Also, in the session area, you will have the opportunity to listen to experts talking about various things, so I'm sure there is something for everyone. And finally, do not forget to also check out our networking area where you will be able to connect with like-minded people. Be sure to grab a bite, and don't forget we are going to be back here in 2 hours. I will be back a few minutes before 3 p.m. CEST, and we will start the afternoon session with our new track, Open Finance and Decentralized Finance. See you in 2 hours.